Good morning to all traders and welcome to this Tuesday's Market Insights video. Another vaccine gets on the line now, or over the line, let's just say. Moderna said now it has a vaccine that it has a 94.5 efficacy, better than the Pfizer/BioNTech that was announced last week. And that is taken positively, of course, from the markets. Not only it has a better efficacy, but apparently it can be refrigerated at between 2 and 8 degrees Celsius for 30 days, contrary to the Pfizer-BioNTech vaccination that apparently needs to be stored at minus 75 degrees. So markets were boosted yesterday. It was actually from Sunday night, I would say, with the open as well. Risk was somewhat on because of I would say just the biggest free trade deal in history in Asia Pacific countries involving also Australia and New Zealand, which both seem to be heading higher as we speak, with investors now reshifting their investments towards risk on assets and away from safe havens, since we have this risk on appetite now increasing. I would be looking at Kiwi, Aussie, and also dollar against the Swiss franc today. And just to add also on the monetary spectrum as well, we've had the RBA providing the meetings from last week's meeting, and they said that the board is ready to take more action. That is not going to involve obviously going into negative rates, because they don't see this as sensible. However, they will go ahead in case needed, of course, with increase in the bond purchases as the coronavirus cases increase. New Zealand, on the other side, they had their RBNZ meeting last week. They also introduced a new funding program, and that would also have reduced cost for lenders, which seems to have been boosting the Kiwi since the lows that we are seeing around 66.50. We talked about Kiwi last week after the RBNZ 4, and we're expecting a wave 5. We've got 1, 2, multi-structural upside, 3, 4, and I'm expecting for wave 5 to take us to around the 0.70. Okay, that's a 70 cents. I'm expecting this because it is the 61.8 Fibonacci extension of waves 3 and 4, right? Now, we could, have wave 5 ending anywhere above the previous high at 3, right? But the structure, at least currently, doesn't really suggest that this is the end, okay? I do think indeed, due to the risk appetite, that we're going to see prices moving higher. Once we get up here or anywhere around here, we are most likely going to reverse because we are wave X, and we're expecting another wave Y in the primary degree, that is also going to end this bearish sequence, okay? I would be expecting this signal to remain on the bearish side. Now, Aussie has a similar pattern, but know that Aussie didn't break to fresh highs. Okay, it hasn't actually since here. For that reason, I'm looking at these as a reversal to the downside. Last week we talked about this potentially being an impulse, but with this breaking above wave A, then of course this cannot be 1, 2, 3, 4, 5. It's got to be a leading diagonal, in my opinion. Okay. So, which is corrective. That said, and due to this move to the upside, right, which looks to me like this is a 1, 2, 3, 4, and 5, I think we're going to move a little bit higher, probably close to the 74 cents, or as close as possible, I would say, and then move lower. In the meantime, I will be paying attention to the MACD signal again. It looks like we are going ahead for the development of a hidden bearish divergence signal. That's why I'm expecting this to move up above the previous high. Okay, in case we don't, then we are going to turn here. Okay, and we are going to look for the 72 first then the 7100 or so, then we're gonna get a B and a C. Okay. Last, I want to have a quick look also on dollar against the Swiss franc. For that, I'm gonna go a little bit further out so that we have a better view. We haven't talked about it for a while. I'm looking at this as an ending diagonal with 1, 2, 3, 4, and 5, right, in the primary degree. And this is also a corrective one. An A, B, and a C. This is what is left to complete wave 5 of this ending diagonal pattern. And 1, 2, 3, 4, 5 for A. We've had a triangle in B. 1, 2, 3, 4, and 5 for the intermediate wave C over here. Okay. In case that prevails, then in this scenario, we are going to look for further upside and perhaps a reversal at the current low. In case we're going to see prices continue moving lower, because we do get a magnet signal here that indicates that prices are going to continue lower, then it is most likely that we're going to see this instead of, because right now we have a 1, 2, 3, 4, and it could be the 5th wave down here for a diagonal pattern, right? So we could be looking for prices to perhaps move down to the 0.87, which is the 61.8 Fibonacci extension of waves. No, excuse me, I think we should be taking this as wave 3, and the 4. Okay, in that scenario, we're probably going to go down for the 78.6, which is around the 0.8925. Okay, but with the 90 already taken out, it's only going to be either a retracement and a continuation up, or we're going to see another false break to the downside, complete this pattern, and then move higher. But in either case, I'm looking at this as a zone that we are going to see a reversal, taking into consideration, of course, that, safe havens might see a decline. Thank you for watching, and we'll speak again tomorrow.